Alex, the Q2 results are out and they were during a pretty turbulent period. Can you explain a little bit about that?
It's certainly been a very volatile period with, of course, the run-up and the Brexit vote. And what we're seeing in our numbers, our key numbers, our capital position has strengthened. We continue to see a strong momentum in our sales. Our underlying earnings did not meet expectations, and our net income was affected by the anticipated loss on the sale of our annuity book in the UK.
And how have you improved the capital position?
Well, we've been able to improve the capital position thanks to management action we've taken. The first one, of course, was the sale of the annuity book in the UK. But in addition to that, we've looked at our models again. We've looked at a rigorous application. We've also put in place some hedges before the Brexit, and that clearly worked out positively. So all in all, we were able to increase our capital position, and I'm very pleased with that.
And what about underlying earnings?
Well, underlying earnings clearly did not meet our expectations. This is partly the result of market environment, with low interest rates affecting our business in the US. But we're also seeing adverse claims experience in both our life business and our health business in the US. And that means that we have to take steps to improve our profitability.
And what kind of steps will they be?
We are implementing the following steps. One, we are looking at all our products and making sure that they're priced properly in this environment of very low interest rates. We'll take decisions on what products to redesign or also what products to withdraw. Second, we'll continue to implement our cost reduction program. We have an ambitious plan for our business by 2018, taking out 200 million euros of expenses. We clearly will accelerate the pace of the implementation. We also are looking at our businesses, and we want to make sure that each and every business fits a strategy, a long-term strategy, and we'll take the necessary actions there. And finally, in our US business, we are present in many cities. And we are going to look at what locations are the right ones for the future with the aim of reducing the number of locations. So as you can see, a very clear and well-developed action plan to address the disappointing underlying earnings which we've seen in this quarter.
Today you also announced the acquisition of CoFunds in the UK. Can you tell me something about that?
Today we announced the acquisition of CoFunds, which is a platform in the UK with 750,000 customers with significant assets. This acquisition effectively completes the transformation of our UK business. We have sold our annuity book, we have acquired last quarter BlackRock's defined contribution business, and we are now acquiring CoFunds. And that means that today we have a platform with over 3 million customers that we are serving a very modern way through our digital platform. And we're very excited with this transformation with the UK.
And in terms of excitement, looking ahead now when the Q2 results are out, now we've got them, what's happening next for Aegon?
It remains a challenging environment. It is clear that we see more volatility, we will see probably continued low interest rates, and that means that for Aegon we have to continue to execute on the steps we've promised.
Thank you indeed, Alex. See you next time.
It was a pleasure.